Welcome back. Premier shareholders have a reason to smile after the group declared its first dividend since listing, paying out 220 cents. This was fueled by upbeat top and bottom line growth, with revenue rising at 3.6% and HEPS gaining 17.4%. And joining me now as we take a look at the year that was is company CEO Kobus Gertenbach. Thank you so much for your time, Kobus. Let's actually start off with that top line growth. There was a softening in growth there to single-digit growth, which was expected. And I just want to find out from you, is this moderation a good thing overall? Although I can imagine, obviously, now you can't go too much on the selling prices.
Well, thank you very much for the opportunity. I think it's very much a good thing from the consumer's perspective. I think if you will remember our prior financial year, we really had to deal with massive increase in global grain prices. The price of maize and wheat really shot up, combination of the Ukraine war and lots of other, I guess, part of the global inflationary cycle that we saw. And I think during the last year, we saw a moderation of that and actually entered a deflationary environment in some of the categories. And so we were able to, especially on maize meal, really pass through price decreases where the price of a bag of maize meal really reduced, 20% plus. And so in a deflationary environment like that, we're very tied to that pricing in terms of our turnover. And if we sell the same amount at a 20% lower price, then you will see a decrease in revenue in certain of our categories. And I think it's really just our ability to manage through these cycles. They've been around for 100 years, and we just need to continue to manage our margins and our efficiencies to the best of our ability, and make sure that we're competitive in a highly competitive market. Yeah. And ultimately glad that consumers got the benefit of that.
All right. And really that you saw in the Millbake division, not the same story really when you look at the sugar side. So sugar, chocolate and packaging material, we did still see there sticky inflation. Is that persisting? And also, are you seeing that selling prices there are remaining elevated?
Yes, I think we've seen sugar prices spike up a lot during the second half of last year. And they've sort of, at this point in time, stabilized a little bit in the short term. The main massive inflationary story really lies around cocoa beans, with a huge reduction in supply coming out of West Africa, countries like Ghana that have various reasons of producing less cocoa beans. And I think that the full extent of that inflation certainly hasn't come through into the market yet. I think the indulgence of chocolate is going to cost us a little bit more over the coming months.
All right. Maybe something that is good for our waistlines. But you did see a widening of your margins there. Is that purely from a cost-saving benefit?
Yes, I think if you go back more than just the last year, it is really a continued drive over a multi-year period where over the last 10 years we've invested 6 billion rand in our manufacturing capabilities. We've continued to build high volume bakery plants with mills and everything that are at scale. And I think that the combination of all of this enables us every single year to continue to drive down our production cost, drive down our transport costs relatively, even though we are subject to the fuel prices that have gone up in the last year. But one can certainly do a lot to make your operations more efficient, and we just continue to focus quite heavily on that.
Talking about that focus, particularly on your capital expenditure, you spoke about, building these high volume plants. Obviously, you've invested a lot into your infrastructure so that you can get to these operation efficiencies. Do you think that a large part of that is done? What do your capital expenditure priorities look like, at least in the short to medium term? Are you going to carry on in that direction or maybe focus on some other things there on CapEx?
Our major focus at the moment is in the bakery operations that service more the southern parts of Gauteng, from the Johannesburg market south into the Vaal Triangle and into the Free State markets. That's the one area that, even with all the money that we've spent in the last 10 years, sort of like our last area that we need to make the investment in.
Yeah.
So we shut down our Ayrton bakery in the south of Johannesburg last year, end of July, and we're busy rebuilding at a total cost of 700 million rand. So it's a massive investment for us. But when we start it up next year, August, it's a full 2-year project. We will also be able to give consumers in this market the same quality and consistent quality that we've managed to do in the rest of the country.
All right. Well, I mean, Kobus, there are lots of food companies. Every time they come out with results, they're talking about venturing into new value for money categories because obviously of the shifts that we've seen in consumer behavior and affordability on that front because of the operating environment. Are you looking into any pockets of opportunity to appeal to these shifts?
Well, I think one of the big areas that was lacking in our portfolio was exposure to the rice market in particular. South Africa consumes about 1 million tons of rice per year. And we were not involved in that category at all. And we've tied up with a family-owned business called Gold Keys International. We started distributing their product, which was mainly available in the KZN market last year nationally. And we've just announced as part of our results that we've also now acquired a 30% stake in their business. And so I think tying up with an established business that's been built up over 25 years, where the family has done a magnificent job in a highly competitive environment, establishing all the supply lines from the origins of where rice is grown in the Far East. I think that will stand us in good stead, and I think we'll continue to look at more opportunities like that as we feel that we really do understand the bulk staples business within the markets that we operate.
All right. Well, we have run out of time. Kobus, thank you so much for your time and giving us insights into those numbers that came out from Premier. That was Premier Group CEO Kobus Gertenbach.